Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate investment expert Casey Gregersen. Now, Casey is the founder and CEO of Bighorn Capital Fund, a real estate investment firm based in Laramie, Wyoming. Now, prior to launching Bighorn, Casey spent over a decade at Shell Oil Company, where he held technical, project management, and leadership roles. Now, in 2016, Casey transitioned to entrepreneurship and ultimately ended up managing seven successful Pure Barre franchises across Texas and California, where he gained invaluable expertise in business operations, cash flow management, and strategic growth. And so, guys, without further ado, I'd like to welcome Casey Gregersen to the show. My friend, how you doing today?
Hey, doing good. Doing good, Kevin. Appreciate the invite.
Yeah, excited to have you here, man. Excited to talk shop again. Just pull back the curtain, learn a little bit more about Casey, who you are, what you do. Bighorn Capital Fund. Kind of what you guys, focus in. What your specialty is. And so I gave you a brief introduction, Casey. Maybe take a few moments. Let's give a little more background of who you are. I know there's a little bit more to the story than that. Again, that two sentence bio I gave you. So for those that aren't familiar with you, that don't know your name, don't know Bighorn, tell us a little more about yourself.
Yeah, absolutely. So maybe unique to some other people, I always start off with didn't plan to be here full time investing in real estate when I was growing up. I was actually a petroleum engineer by degree, and I was fortunate enough to start working in Houston right out of school. But like all the other engineers, they send us out to the field, right, to go work a field rotation to like learn what we're actually going to do, so we could obviously be troubleshooting and designing. We were actually drilling horizontal wells and fracking wells in West Texas and all over the world, actually, with Shell. And so we go out to the field though, and I got out there, and what I quickly learned was, I had the best schedule. I was out there for 2 weeks on a rig, and then for 2 weeks I didn't have to do anything. And so I worked half the year, still had paid time PTO, right? And but that's when I started investing in real estate, right? I had already bought my first rental in 2010 up in Laramie, Wyoming, where I grew up. I grew up in Sheridan, Wyoming, but went to school in Laramie. And I bought my first rental property then. And then, yeah, I didn't do a whole lot for probably 4 or 5 years. I just kept that current property, right? But I was working in the field, and I realized I had this time. So that's when it all kind of clicked, right? I read Rich Dad Poor Dad and went down that rabbit hole. I was like, all right, I got one property. How can I go get more? And that's kind of where it all started. Is I had that extra time on those 2 weeks off to start to build my real estate company. And then 12 years later, I was able to build it big enough to do it full time.
Okay, good deal. No, I appreciate that. It sounds like though at some point along the way you decided to go the franchise route, right? The Pure Bar. I mentioned that in the beginning here. Tell us a little bit more about that part of your journey.
You bet. Yeah. And that was another one. And again, it's like a question you ask yourself. And I think a lot of people probably maybe are sitting in the same shoes today. Because the only downside, or not the only one, but I'll make the joke, right? Today, a lot of people maybe have seen the series Landman, right? And seen that
Yeah.
series out in West Texas. It's crazy how well depicted that they depict the oil field and the way it works, right? So I was one of those guys, right? I was out in the field asking myself, like, man, I loved having 2 weeks off, but the 2 weeks away from my family and that the life on the rig wasn't what I wanted to do forever. So I was asking myself, well, what is it like? What if I didn't have to be away from my family for 2 weeks at a time, right? What if I could actually be home all the time, setting my schedule? So that was really what drove the initial like kind of entrepreneurial part of me and really brought it out. Took out just the engineer that liked to do numbers to like, hey, I want to actually run my own company. So yeah, the first kind of thing we dipped our toe in was the franchise world with Pure Barre. It's actually a women's boutique fitness studio.
Hmm.
And yeah, as you mentioned, we at one point we owned seven of them. But it was to me, it was the perfect training, the perfect MBA on how to run a business, right? As an engineer, I always joke around like they didn't teach us how to do sales and marketing as engineers, right? And most of us weren't very good at that at all. But I learned that skill by starting a business, and it was kind of like sink or swim, right? You had to figure out how to do marketing, how to run a business, how to manage payroll, how to like go actually do get the financing. Like my first loan was an SBA loan, and man, I used to joke about how hard it is to get a mortgage, right, and go through all those hoops. But you try to get an SBA loan done, holy cow, it's a whole nother animal of paperwork. But it taught me a ton, right? The coolest thing is it taught me how to do the marketing, how to run the business. And then what I was able to do is I was able to parlay that really well into real estate, right? Because I was buying rental properties, finding stuff off market, but it's really I was buying on market because the market hadn't really heated up But when the market started to heat up in 2019, 2020, that's when I realized I got to go direct to seller. So I was able to take in all the sales and all the marketing thing I learned in the franchise world and apply it into real estate and really kind of double down.
So were you running the franchises while you were still in the oil business, or
Yeah.
just trying to understand the journey? Yeah, and how
Yeah,
that
for
played out.
sure.
Okay.
Again, it's the 2 weeks on, 2 weeks off, right?
Okay.
And a little bit more on the story. Yeah, my wife was passionate about this franchise, right? And I saw what it meant to her. And we
Got
we
it.
actually just had moved down to Midland, Texas. And Midland did not have this franchise she was a part of up in Montana, in Billings, Montana at the time. So we're like, well, let's go open one. So we moved down to Midland so I could be closer to my family. Because at that point, that was my first solution to like, hey, I want to be close to my family, even on my 2 weeks on, right? So I would
Yep.
be able to see my family still. And she's like, well, I don't want to go without Pure Barre, right? I want to open the franchise. So yeah, it was like literally my 2 weeks off. We were like doing the build out and yeah, it was a hustle. And I'll never forget, like, this is not safe. I would not recommend this, but there were days that like I'd be working nights. I would go in from like 6 p.m. to 6 a.m. I get off, drive back to Midland, right on those busy highways you see in Landman, which is just crazy with the crazy drivers. But I would do that and I'd go into the studio. We'd either be like doing our grand opening or doing our build out, or I'd be down there helping out with staff and doing all that. But my wife, she had a huge role. Like she was the
Got it.
passionate one. She helped teach. She really helped. I mean, it was 100% female too. Like all our staff was all female. But it was fun. I got to go help with the construction, help with the sales, and help wherever I could.
Yeah, I know this is not a show about franchises, but I'm just curious 'cause it's part of the journey. It's a big part of the journey. So you guys grew to 7 locations, and then ultimately, do you still own those today, or have you since sold?
Yep, we sold those a couple years ago, and what I found is I just found out in that particular franchise, and this is really good feedback if somebody's thinking about a franchise. It's like, are you buying a job, right, or are you actually buying something passive? And we found that those were, it was just a very competitive space where it was hard to go hire the right people that could run it without you, right? I always would
Mm.
just say this. I'd be like, you were always one manager away from leaving or quitting or finding another job to where your whole world was on fire. And I just learned that, hey, this was a hard model to really scale up.
That's great. Yeah, that's great feedback. So, I mean, 7 locations. I'm assuming that's probably large enough to where you maybe just have one GM, which is that one critical role to where there's no redundancy. That person leaves again, like you're back in the trenches. Is that a
Yes.
good? I mean, that's a good reference.
Exactly. And the
Yeah,
margins just
yeah.
weren't big enough, right? That model was built for owner operators. And when what we found out is our first studio in Midland, we were there. We were the ones doing it. It was me and my wife, and it was very successful, right? But when we tried to scale it, it was hard. It was even hard because it's so boutique and like people want to know the owner, and you just got to have somebody who really deeply cares about the clients. So it was just, yeah, it was a hard one to scale. I think it's a really good one if you're to do like one-off people who want it's perfect for a husband and wife. The wife's like really wants something to be passionate about and can create some extra income. I think it's great.
Yeah, no, good deal. So, at what point in time did you actually fully step away from oil and gas business? I know that obviously at some point along this journey, you guys sold out of the bar franchise, but talk to me about the transition point, leaving oil and gas and literally both feet in on the real estate stuff.
Absolutely. Yeah. I mean, I came back to Houston in 2020 and again, I was working, I was hustling to where we were finding all of our deals off market. We were doing fix and flips. I had a like cruise, in-house cruise, and then I was doing property management. But I built all those parts of my company while I was still a W-2. And I always tell people like, well, when's the right time to leave? And some people are like, I want to leave now and think about what you could do if you left. And that was part of me too. But I fortunately had a gig with Shell where I could manage both and I could do both. But I was thinking to myself, I'm like, I got this great W-2 income and all these benefits, right? And the banks love me because now that was what it was the best time to be growing a portfolio, right? Because I had experience, right? I had a W-2 income and I took a lot of time to really build relationships with small banks. So that was all working really well. And the other part was like like I was financing everything I needed with that W-2 to where now I could take those profits that I was making in the business and invest it in building out my direct to seller company, in more people, right? In a COO. So I really just used all that extra capital, kept reinvesting it to build out our integrated company. So that way, when I was able to leave, I had really built something that I could both live off of and I could continue to help grow.
So, you're based in Houston today, but a majority of your business, your real estate activities are in Wyoming still, correct?
That's right.
How do you manage that from afar?
Absolutely. You know what? It's I've been doing it for years, right? And this is kind of where it clicked as well. Like, so I'll never forget it. Everybody probably knows where they were when COVID hit, right? And we were all locked down in our house. We couldn't go anywhere. I was in the same boat. Actually, I was still working in oil and gas, and the oil and gas people remember this is when oil went to negative, right? It was a
Hmm.
crazy like madness time, right? And they're actually laying off like 40% of our organization. We're all just figuring out, are we going to have a job? We had really nothing to do. So at that point, I read a book called 4 Hour Work Week, which I highly recommend. It's been one of the game changers for me, and it talks about hiring virtual assistants. So because at the time I'm thinking I was managing like 10 to 20 rentals, and I was in Houston, but I had only like one actually, you know what? Yeah, at the time I only had one in Houston. The rest were in Dallas Fort Worth and then up in Wyoming. I'm like, if I can manage all these rental properties myself virtually, why can't I train a virtual assistant? So that was one of the first like eye-opening moments of like, well, let's build out that process. And again, I'm an engineer, used to having
Yep.
SOPs and like that. So I'm like, I'm going to go build it out, hire a VA, and that's like kind of the first thing I did. So that kind of taught me, hey, I don't have to be there to do it. I can hire other people, right? And the other thing that really allowed me to do it was like, yeah, this does not work to somebody to just go pick up. Like, I live in Houston. Let's go invest in Wichita, Kansas, where I've never been, right? Don't have connections. Because the other thing is, I grew up in Wyoming. I had been doing fixing and flipping and doing projects for years and years, and got to know a lot of contractors, right? So I had a good network of subs. And then the second thing I really built up was in-house contractors, because I found that in Wyoming, it's hard to find great contractors in any market, right? Any real estate investor can agree with that, right? They are hard to come by.
Yep.
But it was especially hard in Wyoming. So what I did is, as soon as I had enough properties to sustain like a full-time person, that's what I did, right? I went and hired a full-time guy who could help manage my rentals and run my fix and flips. And today we have four different guys that are running four different sets of crews that are spanning across Wyoming, and then one up in Montana. So to answer your question, it was a matter of building those boots on the ground people, and then leveraging virtual assistants to kind of put it all together. And yeah, now I love it, because like I love that I can be in Houston, and my investors do too, right? The people I raise capital from, they're in Houston. They don't know Wyoming, right? And they've got lots of other people to do what I do here in Houston, right? To raise capital and do bigger deals in Houston. But they're like,
Hmm.
I want some more exposure, or different exposure, right? So they're like, I can get exposure to Wyoming through you. And then my thing is, I've got this little niche market up in Wyoming where there's not a whole lot of investors, there's not a whole lot of competition, but it's still been a strong, sustainable market. So anyway, it's kind of a perfect blend of like, I can be here, I can raise capital, and then I can leverage my operations up in Wyoming.
Yeah, no, that's great. Appreciate that. So I know that your big piece of your business is still fix and flips. You do rentals as well, it sounds like, but now you guys have ventured into multifamily space. So talk to me a little bit about that. I mean, some of the recent projects you guys are involved in, are they also in Wyoming? And just some more context, if you would.
Yep. Yeah. So we've kind of grown from organically. We were talking a little bit earlier about, hey, how do you get into multifamily, right? And it started off with the single families. My second house, my second property I ever bought, which literally I just I refinanced the first one, got some cash out, bought a second one, and it was a single family house that I converted to a duplex, right?
Hmm.
So like a lot of other people, I kind of grew it like that to a fourplex. Then we bought like a 14 unit, right? And then we started seeing more opportunities, because I do a ton of marketing, as I mentioned, through my direct to seller company, which is WYO Houses, right? So we're always doing texting, we're doing Facebook ads, direct mail, you name it, right? But what we found is we started not just hitting the single family demographic, but we also started hitting multifamily. So then I think our first big multifamily deal, well, the first one was that 14 unit, which I think came from like somebody on LinkedIn, saw one of my articles and shot me this deal. And I'm like, oh, wow, this is in a market that I know. And I knew it was under market rents. So I'm like, this is a great opportunity. And then the second one was a 66 unit in Casper, where it came to us. And I remember underwriting the deal, and it was just mind blowing, right? Because you're thinking about, we're buying essentially a house for $50,000, or it was a two-bedroom, one-bath unit. They're actually condo units.
Hmm.
So we're buying these at 50K, and I'm like, they were already appraising for like 90,000, like individually, right? And I knew it was only going to cost me say 20K, maybe 15 to 20K to rehab one of these. So I was basically, those numbers would work on a fix and flip, or a buy, or say something that you want to go use the Burr strategy on, right? Where you're going to buy it, fix it up, refinance, and repeat, because you could build in that, say, 25% equity.
Hmm.
So I'm like, hold on. Now, instead of doing that on one property, I can do it across 66. So that was probably one of the other kind of game-changing moments for me is when we did that one. I could now standardize one crew working, buy all my materials, and bundle it all up there. And so, yeah, I would say definitely today I'm most excited about more multifamily. I know some people are scared in the space just based on what's happening in other parts of the country, but in Wyoming, like rents are still strong. There's not enough housing, and I think multifamily is still a great opportunity.
No, it absolutely is. I mean, the fundamentals of multifamily are still sound. It's just that, a lot of folks, either overpaid, over leveraged, or put, not the greatest debt instrument in place a couple years ago, and now are kind of paying the piper for it. So, but multifamily itself is, and there might be a few markets that there's a lot of new product coming on that had started being built 3, 4, 5 years ago. I know Phoenix is one of those. It's got quite a bit of a saturation that has to occur until they find some type of equilibrium. And there's probably a number of other markets. Austin's one of them as well.
Yep.
But generally speaking, I mean, and those are all high growth markets, so the population will come and those units will get absorbed. And now there's a massive lag because new multifamily has not been built. There's nothing really
Yeah.
that's broken ground in the last 3 years, right? So like we'll go through another spurt of time where there's a lack of supply, of new supply available, and a population that continues growing. But so the fundamentals are all sound, and no, that's great. That's a great story there. That 66 units. So I'm curious. I mean, obviously, most of the markets in Wyoming, they're all smaller markets. I mean, that 66 unit, was that you buy it from, like, was that like the original owner or the original developer that built the property, or just curious of the, I guess, the ownership profile of the folks that you're actually talking to that own these larger multifamily properties in these Wyoming markets.
Yeah, it's really fascinating, and it's got me thinking. I've been having conversations with my other limited partners and other investors. They're like, "Why are you not doing more of these?" Like, and I'll get to that once I answer your question. But we like the one in Casper. We just found that, yeah, there's not a whole lot of really big multifamilies. You could probably,
Right.
I don't know, like we've actually got a list of, and I've sorted it in Wyoming of like the unit count because you can go pull that as public data, and that's kind of how we're working our way down to talk to these different people. But yeah, this one, and you know what? The 66 unit, and then the second big one I did was 45, and it was the same story, right? It's lack of contractors, it's people buying bigger projects than they wanted to take on, right? And it's these properties that were, both of them were like 70s vintage, right? So they hadn't really been remodeled, and a lot of them had been, yeah, I mean they had a lot of drug issues and a lot of they were not the nice apartment in town, right?
Yeah.
But here's the thing: is in Wyoming, like we're not. It's a lot different than the rough areas of Houston, right? It's really not that bad, and it didn't take that long. Yeah, I mean we really proved the first proof of concept on the 66 unit, right? That had kind of a troubled history, but we went in and cleaned house. Like that thing was probably 60% occupied when we bought it, right? And then it was realistically that's what they told us. They probably told us it was 70%. It was really more like 50. But we cut out, I bet we cut half of that of the 50% there. We probably dropped down to 25%, and we cleaned all these up. We got people in there. We started screening tenants, right? Because that's the other opportunity that I wanted to get to, is I've seen in Wyoming, is like we bought another 23 unit like this where the landlord or the owner is still only has handwritten paper leases. He's still taking cash payments. Like they have put no technology into this. I'm like, and it's dumbfounding, right? That they're still making money and doing this. And that tells me, so two things. I won't get ahead of myself, but one thing is I'm just seeing a ton of these multifamilies in Wyoming that have not been renovated because they can't, it's difficult to find contractors. And we found, just another example is the 45 unit. The reason why this lady was so distressed and sold it to us was it was a small town. She had tried to get these units renovated because this property had been run down for years. She inherited it from her parents, right? So it had
Okay.
been very run down. She's trying to find contractors. She's frustrated because they don't show up. They're overpriced. There's just not enough of them, right? The contractor has the leverage. She's sick and tired of it. And I'm like, I can solve this because what I did is I was going to use one of my local market crews up in Wyoming. But what I actually ended up doing was I recruited a crew down here in Houston, right? I got these guys. It was a group of like 6 guys. They moved up to Evanston, Wyoming, and they moved in those apartments because it was a big project, right? We're going to renovate like 20 to 25 units. So they moved up there. They're living there, and I was able to solve that problem, right? But this lady, and a lot of other people in Wyoming, they can't find and recruit contractors. So that's kind of the big one that I'm seeing. And then the second one is what I was just talking about with like the technology and the electronic leases and just managing it like a professional property manager, right? That's why I'm really starting to want to lean into finding more of these deals because Because even if we don't go find a huge value add where it needs a bunch of work, if we just go in and just optimize it and screen tenants better and have higher occupancy and raise rents up to market value, I could think there's a ton of value just doing that play up in places like Wyoming and
Yeah.
Montana.
How do you mitigate the risk associated? Like I just looked on the map here to figure out where Evanston was. Like obviously a very small town. I don't know what the local economy is. I don't know if there's just a couple big employers there. I don't know what really drives the local economy. But just I guess the question would be, how do you mitigate any risk associated with it being more of like a one horse town, meaning like big employer leaves, or maybe it's I don't know, maybe it's oil, mostly oil based out there. I have no ideas, but you can answer that question. But how do you mitigate that risk? Because there's lots of small towns across the country where that is a real risk, right? Like there's a one major employer, one major industry, and if there's any hiccup there, obviously it's economic catastrophe for the town, and it all trickles down to landlords and business owners and things like that. So how do you manage
Yep.
around that?
Yeah, we're very cautious of because we get deal flow across Wyoming, and there's plenty of those towns where it's like, man, this
Yeah.
town has it's a one trick show, right? And we definitely steer away from those, or we underwrite those deals to where we're buying at such a good discount that we could cut rents and we could mitigate that way. But the ones like Evanston is a great example of that has so much going for it because where it's located right there in the corner of the state. So that's like 60 miles from Park City, and like an hour, just over an hour from Salt Lake City. And it's crazy how many people are already commuting because it's a fraction of the price to live there. Like there's a ton of people that just can't afford to live in Park City. Like the working class can't live in Park City, right? They got to live somewhere
Right.
else. So they'll live there. So
Wow.
that's already been causing that town to
That's a
grow. And
far.
then
How long is 60 miles? Like with is it a direct highway shot, or are we
yeah, it's
talking like?
I-80. It's a direct interstate
Okay.
into Salt Lake. Yeah,
Okay.
in
Yeah.
Park City and then Salt Lake.
Yeah.
Yeah, that was I mean, this was one of my most exciting projects to do. If I could find them all like this, man, we'd be doing really well. And so would our investors. They'd be just say turn it on. But because here's the other thing, it was growing that way, and then we've just seen a lot of other natural resource growth in Wyoming, right? So one project that's like only 40 miles from that town that's going in now, it's just one of Bill Gates's nuclear power plants, right? So it's one of those it was a coal plants being converted, and it started about 6 months ago. They actually started construction, but this is going to bring in a ton of jobs into this economy. There's also like Trona mines. There's just all these little projects that are bringing people in. And that's why we were super excited about this deal because we're like, oh my gosh, this town already doesn't have enough rentals, and there's all these jobs coming in, right? And then just to answer your kind of initial question, like I felt really good in that market because of proximity and the ultimate price point in Wyoming. And that's another one I'm really bullish on Wyoming in general. Like you're surrounded by Utah, Salt Lake City, like that area has just blown up, right? Same with Denver, Northern Front Range, Northern Colorado, really growing. Now Montana's seen a ton, right? All these areas people are want to get away from the cities, right? Since COVID and all that's happened. But Wyoming is it's tucked in the middle there. It's got some of the exact same geography, like the same stuff. People want to be outdoors and they want to be by the mountains, but it still has price. The prices they've gone up, but nowhere near what it's done up in some of those other markets. So I just still think there's a lot of room for growth in those areas, and people are going to want to, and it's a pro business state too. So I just feel like they're going to continue to incentivize people to bring in jobs and ultimately be long-term sustainable.
Yeah. No, that's exciting. No. So I guess no, all great points there. So talk to me about the next 2 years. What does that? I mean, what's that look like for your business? I mean, what are you guys most excited about? What big plans do you have in store?
Yeah, absolutely. So we set a goal this year to close 100 deals total, and we do a lot. I mean, so I've talked about going direct to seller. We talked about the fix and flip and the multifamily, but we do. I've always, when interest rates rose rapidly a couple years ago, we just looked at the market. We're like, hey, we want to still have our direct to seller business, even though rates were killing a lot of deals. So we started getting creative, taking over loans or structuring seller finance deals. We also do what's called like novations, where we'll talk to a seller and they'll be like, hey, if I'm good to sell my house at 200K and I'm happy there. If we sell it for 250 on the market, are you good? Or 225 and I put some money into it. So we do a lot of these creative transactions. So our goal this year is to do 100 transactions total. But one of the bigger things is helping, and it's kind of back to what we talked about when I was in the field and I was asking myself those questions, right? And as I built up this real estate company, or my vertically integrated company, finding the deals, managing contractors, doing property management. What I found in conversations was not many people wanted to deal with all this, right? They didn't want to deal with the headaches. They didn't want to have to go cold call. They didn't want to spend the amount of marketing I did. But my other passion, so I combine that with those people that need. And then what I also found was like there were so many people in my shoes, especially in oil and gas, but this could be any industry where they're in a job where they're like it's volatile or they're not able to be around their family. And I just knew where I'm at today. I didn't quite go into detail on this earlier about like why I left my W-2 job eventually. Like eventually I built it up big enough I could. But the biggest thing was I wanted to be around my family. I want to be there for my kids and their sports games. So that became a bigger passion of mine over the last, I would say 12 to 24 months as I built all this up to want to give other people that same opportunity, right? To where they can create their passive income goal or create enough financial freedom to where they can make the decisions. They don't have to choose work instead of family or business instead of family. I want to give people that choice. So that's my biggest goal over the next 3 to 5 years is to help 100 people achieve, it's actually 100 families achieve their financial freedom goal. And that may be by them buying turnkey or teaching them how to fix and flip. Or some of those people just decide, you know what, I just want to be passive. And those are great people that
Yeah.
invest with me on some of our projects.
No, I love that, Casey. I love every bit about that, and I appreciate you sharing. So for those that are intrigued by what you're doing, that want to learn more, where's the best place to track you down or get more info?
Absolutely. So the easiest one is our website, caseygregersen.com. Really anything that any platform you guys are on, if it's LinkedIn, if it's Instagram, YouTube, everything is under my name, Casey Gregersen, and you can find us on our website. And one of the things that I like to give to everybody is if you go to our website, I have my passive investing playbook, which I didn't even mention today, but I played college football growing up and I've always loved sports. So I decided to I wanted to give them like the playbook that coach would give you. So we built that out a couple of years ago to share with anybody who's interested and get started. So I'd encourage the people to go to that website and check it out and yeah, and reach out. I would love to talk with anybody who, if you want to be part of those 100 people, 100 families I help, like I would just reach out. I'd love to help any way I can.
No, I appreciate that. Appreciate you coming to the show, my friend. It's been great talking with you.
Awesome. Thank you, Kevin.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.